Ari Pine, co-founder at Digital Gamma. Such a pleasure to be here with you today. I've been looking forward to this interview for a while now. Really excited to have this conversation. You have a fascinating background. You are a serious, hardcore computer engineer, but also you are a classic, old school, real deal finance guy from the JP Morgan fixed income side, I believe, back in the Liar's Poker era. I'm so excited to have you here to talk about all that. Ari, welcome to Real Vision.
Thank you so much for having me. I'm very flattered to be here. I'm definitely blushing a bit from that introduction. Although, aging me like that, I don't know.
I was there with you. So give us a little bit of a sense of your background, what you did before you got into finance, and then what you did when you started in banking.
I actually went right into banking, which was a little bit surprising for me. I was trained as an engineer in school. I graduated Caltech, and I was very fortunate to get recruited out by JP Morgan. I started out in a technology group there and then moved over to the fixed income floor. And really, for a good chunk of my career in one form or another, I've been both doing a combination of some sort of making markets and providing liquidity to the marketplace, and also trying to integrate as much as possible the technology applying technology to my financial trading. So I've been very fortunate in that regard, and I've been also very fortunate in having a very wide selection of instruments to trade, dealing with, like I said, fixed income, but also many derivatives, trading stock options and trading commodity options, and then futures in a variety of different ways. And so that's been very satisfying and really helps kind of give an overall feel to both a specific trading experience as well as having a general macro background.
Yeah, it's really interesting for people who are younger, who may not realize this era. The place that you wanted to be was at a bank. This was before the rise of hedge funds and the buy side, when you were at JP Morgan and I was sneaking in the back door at Credit Suisse in the 90s. This was the place that the smartest people wanted to be because it was a time of tremendous innovation, tremendous novelty and creation of new products and new ways of looking at things. Banking historically, before our era, was not run by engineers and physicists. It was people who were kind of maybe a little bit on the, dare we say, boring side. And then things got exciting, I guess, for worse and better.
Yeah, well, I think it's great that you're describing the computer science and, physics PhD departments as being the exciting side as compared to, the Liar's Poker characters, the mortgage bond traders of Liar's Poker.
Yeah, give us a little bit of a sense of that era, because this was really a time where there was a lot of innovation happening on the fixed income side.
Yeah, there was a ton. I came in a little bit after that, but it was particularly interesting from a cultural standpoint as to how accurate that picture from Liar's Poker really was. I remember being in a number of fixed income meetings and how they felt about the equities department. And that was 92, 93, literally right before the internet era took off. And all of a sudden, the equities people were really the ones that were driving the earnings behind everything. So, right. There's always that pride before the fall. But it's pretty incredible. I have some of the reports I would move around to, not job-wise move around, but I would try to learn from a lot of different departments. And so I even have some of the things from before that I kept from those days. And it's really interesting to see some of them, how people were incrementally moving toward, optimizing their portfolios, whether it's, creating barbell efficient frontiers or, David Shimko, who was in the FX department, and options were still fairly new at that point. And they were trying to come up with implied distributions, from the option pricing. And so it's very interesting to look back at that time and all of the products and all of the growth that they had at that time.
Well, it's fascinating. We're here, of course, to talk about crypto, but it was a time very much like our own of tremendous innovation. I think I got there a little bit later with the rise of the internet. And that's the way I was able to sneak through the back door to get into banking because we had this time where it was like anybody who had this new crazy technology knowledge about something called the internet was
Right.
welcome, which brings us to right where we are today. Tell us a little bit about how you got interested in digital assets and cryptocurrency.
Basically, dragged kicking and screaming was about how it happened. My business partner is Paul Sachs. He's a great friend, and I was working very hard doing quantitative futures trading, and he basically did the equivalent of tapping me on the shoulder and saying, "Ari, what are you doing? You're trying to price out to the sixth decimal place, and there's this market where there's 150% volatility, and people can't price things to the nearest $100. Like, why are you bothering with that?" And so that got us very interested in crypto. And then furthermore, we felt that we had a lot to add in terms of integrating technology and having a feel for how to address operational fragmentation and complexity and trying to help people with that.
Yeah, so let's talk about a little bit about what you do at Digital Gamma. People can see the screens behind you, of course. Give us a sense of your current shop, what the mission is there, and what you're doing.
So the mission now is we are a trading shop, and we are focused very heavily on derivatives themselves. The derivatives market in crypto or digital assets is extremely interesting. And yes, it really harkens back to the markets in the 80s and 90s, and even really before that, where it wasn't necessarily derivatives, but markets would trade the same assets in a lot of different places. And that makes crypto extremely interesting. It's both accessible in terms of data and literally access, depending on where you are, of course, and what regulatory environment you happen to be in. And then also being able to address things like options in crypto as well. So that's where our focus is. We started out doing prime services previously and focusing on actually building a tri-party repo for crypto.
And so let's talk a little bit about what TPR is and what prime broker services are and why they're so important to institutions that want to participate in the digital asset space.
Yeah, so that's a really good question because I think this really gets at the heart of how traditional finance people take a look at the digital asset space and make extremely reasonable intuitions about what is needed and what should and should not be, and then perhaps find themselves not exactly in the right spot. So we started out trying to make it so that people could access a number of different venues and be able to borrow and lend digital assets and do things like what we're used to, right? Best execution, arbitrage, that sort of thing.
For people who may not know, this is getting the best price because there's a lot of fragmentation across exchanges, particularly years ago, and the ability to basically take advantage of those price differentials through arbitrage, through riskless arbitrage, when you have the potential to buy on one exchange and sell on another.
Absolutely. And in fact, we still see that today in sort of the smart order routers or the integration because there are so many options exchanges these days in U.S. equity options. So we still have that around in terms of the NBBO, the National Best Bid and Offer, but that really isn't available in digital asset space. So things can get rather varied. But it also turns out that digital assets have really its own financial system, and that at times can get a little bit of a bad rap. So years ago there was a situation on OKX. Which is one of the offshore Asian exchanges where due to heavy losses on one party, the gains were kind of clawed back and given to the exchange in order to make it whole. And so this is kind of an interesting thing that's really quite anathema to many financial market participants. But if you think about it, you're going to give it one way or another. Either you're going to be giving it up to your clearing firm or your prime broker that's guaranteeing your trades, and then probably also wherever it is that you're working, right? So if you are at Credit Suisse, right, you're not going to get all of your P&L handed over to you. But on the other hand, if you would like to trade in the digital asset space, you are able to go and participate and not have to worry that you're going to lose your home and all the 3 homes around you because you've gone into debt for some trade gone wrong that has been over leveraged and the clearing firm wants to come after you for whatever reason. So in digital asset space, that's a little bit different. It's sort of just please deposit another quarter. That game is over. You can keep playing. The other thing that's very prevalent in crypto and is very widely acknowledged by traditional markets people, but I would say significantly less so by the crypto participants themselves, is how much credit risk is out there. And there's quite a substantial amount of credit risk. It, however, has not yet fully been integrated into all of the participants' thinking, at least in my estimation. There are a few people that are thinking about, if there were CDS on CME, credit default swaps, in other words, pricing the risk of default on CME, which I'm sure do exist, and comparing those to, let's say, Deribit or FTX, how might that look? And what do I need to receive in order to trade on these venues as compared to the credit risk that I'm taking on? So that's something where, we give a certain amount of thought, and we'd like to see the market begin to acknowledge that as well.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.